Welcome back to another video. Today I'm gonna be giving you guys the crucial elements of creating a trading plan, guys. A trading plan acts as your roadmap leading you to trade every trade with confidence, guys. Whether you're new, whether you're just refining your strategy, guys, with a solid trading plan, man. Let's say like December time, and if you had a solid trading plan from the beginning of the year, December time, you know you're gonna be having that money to be playing around with. Whether you're gonna be buying your little brothers this, whether you're gonna be doing this, or having some, just some money nyana, so that you're not broke and dependent on other people, man. That's why having a solid trading plan is important. If you don't, it's fine. There's still next year. We will continue developing this next year. The next year around this time, you are popping, man. Let's just dive into the crucial elements of having a solid trading plan. So the question is, how do you go about developing a solid trading plan? The first tip is, guys, you need to identify your trading style. You need to identify whether you're a swing trader, a scalp trader, a position trader, or a day trader. Let's break it down from smallest to biggest, right? So what is a scalp trader? A scalp trader is a trader that's looking for short-term market movements, like they wanna open and close their trades within seconds or minutes. These are the type of traders who like news events because they want that quick burst of a candlestick going bullish, or that quick burst of a candlestick going bearish. They want quick, especially NFP. You'll see the scalp traders there in NFP. Those are scalp traders, man. They love NFP, they love news events, and they just love short-term market movements, just quick in and out. If you're that type of a trader, you need to understand that, oh, I'm a scalp trader, and that's where the beginning of your trading plan begins. Now let's move on to a day trader. A day trader is a trader that holds their trades longer than a scalp trader, but they don't want overnight exposure. So they'll take a trade today and they'll close before today ends, because they don't want overnight exposure, maybe because of swaps or whatever the reason might be. They just want to be in today and out today. That's basically a day trader. If you resonate with that, if you believe that scalping is not for me, it's just too short, I want to hold my trades longer, then or within a period of a day, you want to make profit today and you're done tomorrow if you get a setup, and the day after, right? So that's a day trader. And now we move on to me. I'm a swing trader. I used to confuse swing trading with day trader. I thought I was a day trader, but I only found out that now I'm a swing trader. Let me break it down and I'll explain afterwards. So a swing trader is a trader that holds their trades within a couple of days or weeks. So that's basically me. I can hold a Nasdaq trade for 4 days, depending on how the market moves. In generally, I can close within a day, I can close after a week, especially with currencies. That's when it tends to go maybe a week, 2 weeks with one position trade. So I'm more of a swing trader. I love swing trading, man. I want to capitalize. I want to see a 4 hour candlestick, 4 hour candlestick on top of another 4 hour candlestick with that sniper entry there. If you know, you know. But check out my earlier setup, you'll see how my trades are basically. And finally, we have a position trader. So basically, a position trader is a trader that holds very long term, like Bo Warren Buffett. They're holding for months. They can hold for in a long time, for months, for weeks, months, and like maybe a year or so. Who knows, man? These people hold these trades. Like, that's, for me, that's too much holding, unless I have an abundance of capital. So if you do, maybe if you don't. And also, it also helps with people who don't necessarily want to be in the markets too much. Also, for me, swing trading also helps. If you don't want to always go in the markets daily, you just get your setup, you take it and you're out, you're done. You relax the whole day. For the next how many days, they're all yours. You don't have to worry. You know your position, you have your stop losses, you have your TPs, everything is in play. So basically, that's the difference, right? So I thought a swing trader, I thought I was more of a day trader, and a day trader was an intraday, whatever that term is. But anyways, those are the terms. You need to either decide whether you're a scalp trader, 2 seconds to a minute, Day trader, you want to close within that day, that specific day. Swing trader, like a moi, you don't mind holding a couple of days to maybe a week nyana wabon, or currencies it can take 2 weeks nyana. That's like, I've never gone above 2 weeks holding, hell nah. Then there's position trader, where you hold that position, but you hold that position, you see those, that's where you see those daily candlesticks stacking. So you need to decide whether you are with this or that. So let me know in the comment section what type of a trader you are. If you did not know the differences, tell me what resonates with your spirit more down in the comment section. Like I said, December, boss, man, you gotta have that Christmas spirit in you guys. Gotta have that Christmas spirit. Let's do this. So guys, also it's important to always factor in that your trading style must resonate with how you live, right? It must be aligned with how you live. If you have a job, if you're working from this and this, you need to identify a trading style that best suits that, right? So guys, if you want me to make an example of a trading plan, make sure to let me know down in the comment section below, my bad guys, so that I can do that for trading plan 2.0. I can also go deeper into this, but now I'm just giving you guys the outline. So let me know if you want more of this, right? So now for number 2, your trading sessions, you need to pick which trading sessions you're gonna be trading in. Keep in mind that the market is open 24 hours a day from Monday to Friday, unless you're trading VIX and all of that, synthetics. If you're trading synthetics, then you trade the whole week, but I'm talking for us who trade from Monday to Friday. One weekend the market is closed. So but even though the market is open 24 hours a day, does not mean that you always have to trade, man. I know this guy always trades. As long as the market is moving, he's trading. At 12, if it's open, he's already in with 5, 6, 7 entries. By morning his account is blown. So that's why it's important to understand which trading sessions you participate in. For example, let me give you an example about moi again. So moi trades from London session to New York session. The open of London session to the close of New York session. That's when I look for my entries. After that, moi does not look for entries, right? So what are the different types of sessions you should consider? We have Asian session. That's basically when the market, according to my experience, is just mid. It's just ranging. There's not a lot of volatility. It's calm. The market is calm, you know. So I like it, man. Especially when I'm holding a nice deep trade, then that trade is already in, and it just slowly, gradually just increases slowly. Overnight I wake up, yeah, okay, it's increasing gradually. New York session, then we have that volatility spike, you know. So that's the first session. If you want to trade in those times, you can consider that too, right? So now we move on to London session. London session, this is where we expect liquidity injections within the market, and that's where we can expect volatility, strong volatility at the open of New York session and during New York's London session. My bad, I meant to say London session. We have liquidity injection in London session, right? So the market is volatile, it's energetic, it just woken up, just finished these stretches, just took in a buff, and it's ready to go. And that's where I like playing in. I like playing in when there's movement. I love movement, I love volatility, right? So now the next one is New York session. New York session, this is where most people are trading. New York session is very volatile. That's why most people are trading New York session, and that's why I say I overlap from London to New York session. So when they both clash, oh, beautiful things. I get most of my setups during New York session. They build up perfectly. New York session, London session, my setups are just beautiful. Like New York session is a lot of volatility. There's market, like there's so much ample opportunity for you to capitalize on, right? So basically those are the trading sessions, guys. And now we're gonna move on to building, like understanding which time frames you should trade on. So you need to build that mindset on, okay, we have different types of time frames. We have weekly, we have the daily, we have the 4 hour, we have the 1 hour, we have the 30 minutes, 50 minutes, and going down, right? So you need to understand which time frames you are using in your trading plan. You need to write that down too. Okay, this is the the time frames I'm using. And guys, always write these things down, write everything down. Like I said, I'm giving you an outline, a template of how you can go about building your own trading plan, right? And every time you take a trade, you must ensure that everything is ticked. Okay, I did take my trade here, it's with this time frames, or it's with this. So back to the point. So me personally, what time frames do I use? I use the daily, 4 hours, and 1 hour, and 30 minutes is where I enter. You see, because why I'm a swing trader, so this is what you can expect. So if you're a scalp trader, you mostly focusing on maybe on 30 minutes to lower time frames and looking for your entries within the 1 minute, not 1 minute, 5 minute time frame, also the 1 minute time frame. You can look for your entries between those time frames. You can alternate between those time frames, but you want to, because you want quick ends, so you want to enter with 5 minutes or 1 minute, and you're looking for those quick market movements, quick, and you're dipped and you're out. If you're a day trader, you're mostly maybe focusing, you do maybe tend, I do know some traders who do go to the daily just to get that overall feel, what the overall market, overall direction. Like I always say, I like going with the overall direction. I need to know the overall direction is before I start looking for my setups and start looking for my entries, right? So as a day trader, day traders typically enter on 50-minute time frames or 30-minute time frames. Maybe they don't necessarily enter on 1 hour, it's just too much for them. 1 hour, 4 hours is nope. But they do use those to build these setups so that they can enter on lower time frames, right? And me, more swing trader, like I said, daily, 4 hour, 1 hour, 30 minutes is my entry. I don't go lower than that. For me, there's just too much noise down there. And for a scalp trader, they might feel that they're missing out on setups if they have to wait for those bigger time frames. So it's all about perspective. You need to know where you fall. Don't try and be a jack of all trades, trying to do everything. Pick a side and stick to it. Understand how they think, how they operate, and just go about it, right? And just go about it. So we mentioned day traders, scalp trader, and swing trader. Now position trader, they typically probably looking at 4 hours is probably their entry points. Like a 4 hour is probably their entry points. They're looking at the 1 hour time frame, they're looking at the 1 week time frame. They know that 4 hour is my trigger spot, and once it releases, we're gonna be holding for a long ass time. My bad for the language, guys. So that's basically it. So we've covered 3 tips right now. Now we're going to be diving into the 4th. So guys, if you have found value in this video, make sure to hit that like button, subscribe, and share this video with other like-minded traders who want to grow and who want to achieve success, right? And make sure to let me know what your trading plan is at the bottom of this video, at the comment section. Now tip number 4, and like I said on my previous video, how to triple my initial investment, how I did it this year, which the video will be posted on the bottom of the screen shortly. So guys, you need to have risk management. You need to understand, you need to create a plan. Okay guys, I'm gonna risk 1:2% of my trading capital. I'm willing to make $2 to lose $1 per trade that I take. Maybe your account is a $50 account, right? You're willing to make $2 to lose $1. So the solid trading plan is basically having a sound structure. You're willing to lose this to make this. Are you willing? This is how much you want to, you need to have that so that you can calculate how many trades you have in order for you to blow your account. So you need to have that knowledge beforehand. How many trades do I have using this formula, and how many trades do I need? Let's say I take 2 or 3 trades back-to-back losses. How many trades do I need to get back that money? You need to have that information so that it's easier. So once you combine everything that I've taught you, including this risk management, man, you're gonna be unstoppable. You're gonna be unstoppable. Nobody can stop you, bro. You're gonna be unstoppable. And like I said, if you want me to create you a trading plan idea based on how I specifically trade, let me know in the comment section. I'll promise you guys I will do that. It's gonna take time, but I'm here. We're working, we're making money. Vele December, boss. but we're working. Work comes first, you know. So make sure to like, subscribe, and thank you guys for your time. Peace out.